Everybody, I'd like to introduce our next presentation here at the Planet MicroCap Showcase. In fact, we wouldn't be able to do our events without this company and their software. So with that, we want to thank the entire Issuer Direct crew for all their hard work and dedication. And yeah, with that, their CEO is here to do a presentation as well, Brian Balbirnie from Issuer Direct.
Thank you, Bobby. This is a tradition. He does this for us every year, so we got to keep that up, right? I'm going to do something a little different. I just made a promise I'm not going to use the words AI during my presentation. I'll call it a recommendation engine, if I could use that. I think you'll get what I mean by that because I sat in on 14 different presentations today and everybody says AI. The next thing I'm going to do is a little bit of interactiveness. We've all been sitting here doing this, paying attention to all the presenters. So I'm going to ask you a little bit of questions with a raise of a hand or a nod. I would appreciate it if you don't mind. Obviously, company is Issuer Direct. We'll talk a lot about who we are and what we do. And this is where we're really going to get into some of the Q&A from me to you, is that our job and our vision of what we believe in what we're doing is to reinvent how brands share, tell, and inspire their audiences. And so on a daily basis, how many of you read press releases from your broker terminal or Yahoo Finance or something? Everybody does, right? Listen to earnings calls every day, every week, every quarter. We do that. Visit investor relations websites, do the same thing. And for folks that are here in the media, get pitched all the time. I'll raise my hand to that one. Chances are that 20% of the IR websites in the micro small cap spaces that you visit are our technologies and platforms. About 14.5% of the news articles you read on a daily basis come from AccessWire or Newswire, our brands. All of the earnings platforms and investor days that you listen to, about 27% of the microcap and small cap spaces use our technologies for their earnings calls. So chances are you get updates from us. You register for conferences like this one, you get your schedules from us. You get all your availability and your options to see and read about the companies you're interested in from our technologies and platforms. So if you think about 12,000 customers, what we have, a little over 12,000. And you think about the touch points of the interested parties, we'll call us interested parties in those companies. We are producing those interested party touch points about 600 to 700,000 times a day on our network. We gather that data and analyze that data. So as we talk a little bit more today, you're going to understand why some of those comments are important. Forward-looking statements everybody knows. A little bit more about who we are, right? We're a New York Stock Exchange American listed company. A lot of what you're going to hear today is really unique to the size of company we are and what we do and how we generate our incomes. But we have less than 4 million shares issued in outstanding common shares only, no warrants and no crazy options or anything there. Very clean capital structure. Inside ownership, we believe heavily on the largest shareholder between management board, is 26%, about 26.5% of the shares are owned by us. And like we talked about earlier, a little over 12,000 customers with about 135, 140 employees, probably touching about 30 countries now, right? Customers are all over the world. Corporate offices, we deem them as where we say that they're countries. What most of you don't know is these people, right? You know me, a couple of these folks are running around here today. There's 9 of us here helping Bobby and his team run this event, to be sure that the webcasts are going off without a glitch, the one-on-one desks and your schedules are perfect, and everything you need in between for tomorrow is going to go off without a hitch. I couldn't do what I do, couldn't stand up here, wouldn't have the time to do everything if I didn't have a crew like this. Each one of these individuals have about 10 plus years experience, if not more. Bernadette would really be mad if I told you she had about 27 years experience in this industry. She's our VP of distribution. She helps drive all the entry points for our news distribution platform. But these folks I've known. James Michael started with us at the very beginning, so he's a veteran, 18 years like myself. My CTO came on about 2 years ago. I've known him for 20 years. EVP of sales has been here a couple of years, and Steve, our CFO, is likely now 14 years between an acquired company and Issuer Direct. So we have a deep bench of experienced individuals that understand the industry, understand our customers, understand ourselves as employees and how to get along for this length of time, right? I mean, in some ways, this is like a marriage. You spend more time with these people than you do your family and your spouse sometimes. But we go to battle every day together and help support one another, and I couldn't do what I do without them. So what do we do, right? I think most of you know, we talked about it earlier, raised our hand and said that we read press releases and listened to earnings calls and everything else. But essentially we build tools and technologies to help public and private companies tell their story, move their messages, and engage audiences. And we do that with a blend of subscription and services business. So let's take a couple of examples and we'll open them up a little bit just to make it clear for you. On the news distribution side, customers come into our platform to tell their story, whether it's an earnings call, press release, whether it is an announcement of a partnership or whatever the news article is. They pick their distribution, they use our recommendation engine, not going to use that acronym, to help them write their story better. And what we're doing with AI is a little different. I did say it, I'm sorry. In that we are not using an open network. We're using a closed network. And think about how important that is from a customer perspective. And I hope that you appreciate that from our approach here, is that we're ensuring that every bit of data that our customer gives us is closed to our network to them and not opened. Like ChatGPT is an open network. Whatever we all put in there, it's using and cataloging and probably regurgitating to somebody else at some later date. We don't do that. What we do to our technologies, though, is we amplify and look at what everybody's saying and take that contextual tonality, and then we tell our customers what they could say to improve the article readability and or improve the engagement of the article. And that is what the important component is of our news distribution platform. And if you extend this technology, we use it in our pitching products. When our customers license our Media Suite products, meaning they want to reach media or reach professionals in that space, they will use our pitching product with our recommendation engines on how to pitch them. And how we determine that is based on the articles that those writers and authors wrote in the past to see what the engagement profile is of that content, to know how they should pitch them to see if they're going to get the pickup or the interested articles. Those are important components to us. Those are two differentiations for our news distribution platform over the competitors, Business Wire, Pure Newswire, and Globe, and we'll talk a little bit more about them later on. The market looks at us as kind of three brands, right? AssureDirect is the public company, right, that sells the compliance solutions, stock transfer, annual meeting management, disclosure, the SEC, and CDR. It's our core business. We'll talk about revenue mixes in a little bit. That is more of our IR practice business, and our PR/IR business really is centered around the SMB, whether you're public or private, doesn't matter. We have a subscription solution that you can pitch media, run press releases, monitor your brand, have a newsroom, and if you're public, then have the earnings calls or the investor relations platforms. And so as you see us mature and scale this business, you're going to start to see us differentiate some of these IR PR solutions into very different buckets. But let's look at those, right? Talk about them, break them down just a little bit. Today we'll talk about it in communications and compliance because you see that in our filings. When you read our quarterly statements, we refer to this as that. And so I want to focus right now just on the product sets is what we talked about. And I want to focus in a little bit on what the new is here. Our news distribution platform, I think most of you know it as AccessWire. Every article goes out, says AccessWire. We drive new business into AccessWire every single day, whether it's e-commerce or outbound relationships from the IR and PR community that come to us. But more often than not, the majority of our new customers come from Newswire. So if you hit newswire.com, it is a pretty predominant brand in the market. It's got good SEO value, so it is picked up quite a bit from Google searches, and we get a tremendous amount of e-commerce customers coming in that way, buying 1, 2, or 3 press releases to begin. Our job is then to flip them, right? Sell them a Media Suite product, right? These other things that you see on the screen in green, the media database, the monitoring and pitching products that give us more of that ARR solution that we're looking for rather than a usage-based business, which is what press releases are to us. Not to us, but to the industry. That is what it is. Of course, webcasting and events platform and our websites. What's not included in the communication space, to be fair, is revenue generated from events like this, right? It is in this category. I'm happy to talk about that at a later date. But our primary focus are the categories that you're looking at on the screen. So it accounts for about 72% of our overall revenue last year. Everything I'm talking about are revenue numbers are 12/31 last year, not Q1. We plan to file on the 9th of this month, our first quarter statement. So about $24.5 million. And then if we flip conversely to our compliance business, this is that core business that we started, right? If any of you know the history of us, in 2006, we built the first cloud platform for regulatory filings. Customers that we knew, meaning CPAs and audit firms and legal and CFOs, said, if you built a regulatory product, an 8K, 10K, 10Q product in the cloud, I would use it. It's like the field of dreams, right? We built it thinking they would come in 2006, and guess what? Nobody came. Everybody wanted you just to do the work. It's the traditional Edgar model, right? Send it to the financial printer, they'll do the work. But to be fair, our technology was good enough that we could do it in 3 easy kind of vernacular ways: better, faster, cheaper. That's how we sold it. That's how we built that business. But if you know the financial markets 2006, the number of public companies from there to today is drastically different, right? So for us, there was a pivot in our strategy. We knew we were going to go down the hall to the communication side of the business and scale to grow. That market size, or TAM, continues to shrink more and more every single year. The benefactors, and if you actually go back through some of our earnings transcripts, you'll hear me say it, that we expect the business to decrease single digits every quarter. And for the last 18 months, it actually increased every quarter. So I'm going to continue to say the same thing. It's going to decrease single digits every quarter. And to be honest, at some point, that is going to happen, right? So a lot of that business focus today is just on maintaining these customers, maintaining the technologies of these customers, and all of our investment is in scale, because the larger TAM for us is sitting on the left side of your screen in the communication side of what we're doing today. We talked about news distribution volumes. I think all of you know who we call them peers, competitors are. Decision, PRN, PR Newswire brands, the Globe Newswire Notified brands, Business Wire, and then we'll talk about miscellaneous in a second, and ourselves. We used to buy data from the market to look at news distribution and figure out aggregate volumes and who was doing what. And then back when we started doing that, we were like 1-2% of the market. And we kept seeing headline duplicates in everybody's feeds. So we started looking closer and said, you know what, the feeds in the market are not correct. So we actually have an internal group of people that spend nothing but analyzing articles on every one of our competitors' websites every minute of the day, looking to see if that article content shows up in any other network so that we can remove it, find the original source, and really catalog it correctly. Started this about 16, 18 months ago. And at the end of last year, or I'm sorry, at the end of Q1, that should be Q4 2023, I'm sorry, we accounted for about 14.5% of the market, right? So every news, as we talked about earlier, when we raised our hands, who reads news articles, 14.5% of everything you read comes out of our platform. We have continued to have success in our news distribution, both from a net new customer basis, from a volume basis, and an average price per release. All have been increasing for 8 years, 9 years, as long as we've been in the AccessWire news business, actually maybe close to 10 years now. Last year ended at 14.5. Our guidance and hope next 12 to 18 months, we'll get to 20% of market, right? We're going to continue to do that both on 2 aspects. One will be slightly de minimis, meaning the e-commerce side of our business that will drive the small, kind of cupcake shops and muffler shops and kind of local business in your community that want to tell their story. They'll use our brands to do that, but more so as a way to move to our subscription product model, where we're going to take our media suite and news distribution and package it together. And we'll talk about kind of ARR, or average revenue, in a second to what that looks like. So we believe that will help drive some of the volumes. Now, look, I would tell you that we've had great success in increasing average price per release for the length of time that we've done this, but I'm going to tell you the market is competitive right now. The average price of a release is coming down in the market. The good news for us, right, and when we think about this, and I want to delineate these 2 points, if the commoditization is there where pricing pressures are prevalent to everybody, the winner is the agile. Who is the most agile of the group and can handle that? Whose distribution costs are set up to be able to handle that? And what infrastructure costs are there to be able to handle that? The institutional base of the oldest newswires can't handle that. And I'm not the data expert, but LinkedIn would tell you, if you sat there wanting to look and see how many how many PR professionals in the sales arena worked at each one of these other 3 organizations and don't work there today, you'd find likely 25% of them that don't work there today. They continue to shed headcount in sales and marketing and back office and editorial because they can't keep up. That's how they're trying to manage the business. Our editorial team has continued to increase, our sales and marketing team has continued to increase, and we continue to invest. So again, the agile wins in this game, the long game. And we're very confident that we continue to build tech enablement on our platforms that will outperform what these folks are doing to help drive that in our subscription model long term. We'll talk a little bit on financial highlights, and I'll come back to it in a second. Again, fourth quarter revenues was about $7.5 million, 6% up over the prior quarter, and about 42% up year over year, heavily impacted by the acquisition of Newswire that we did in November 2022. The salient point is at the very bottom, right? 68% of the revenues for fiscal 2023 was driven by our communications business. That number has continued to kind of sit in the 60s. We've talked a lot and guided a lot to the fact that that will go over 70% in the years to come. We're likely there this year. Our internal projections on where we see our compliance business kind of shrinking at the single digit, and where we see growth in our communication side, we'll see that jump to over 70% of our business. If I was to kind of unofficially guide the years to come, it's likely 3.5 to 4 years will be 90 to 10. 10% of our business will come from our compliance end of the business. And look, at some point, that may be a divestiture for us to look at, right? We'll keep our options open, but it does generate a good amount of cash. It is core to our business, and we do have a lot of customers that use both platforms. Tough to talk about numbers that are stale, right? But end of the year, we had over 1,000 subscription customers. Obviously, those numbers are going to increase for the end of Q1 that you'll see here in the week. It was up over the prior periods. I think the most important thing is the right-hand side. I want to really focus in on what this looks like. When we started guiding to what we call ARPU, average revenue per user, you're going to hear us change it to ARR here in the coming quarters. But we were about 5,800 is what the number was about 2020. And then we began to scale this. And the scale came from two things. And a lot of folks may not know this, but I think it's important to point out. In the early part of the slide, in the first couple of years, it did not come from price increase. We didn't raise prices on news distribution for the first 7 years that we did news. It was if we entered a contract at $500 a press release or $20,000 a year, that was your price, and we continually renewed you. It was built on adding new products to their current contracts. So customers that bought IR bought a media room and bought press releases. If they bought press releases, they bought earnings calls. So our account management team was able to keep about 98% of those current customers renewing at about 115% of net dollar retention, which is higher than the industry average. If you were to compare a comp in the market that's no longer public, but you go back and look at their filings, Q4 was about 84% retention and about 102% of net dollar retention. So we outperformed some of our peers in some of those categories, which we think is very important. Now the focus today is to move all of these folks to a full subscription model, including the media suite. And that's where we believe by the end of this year, we'll see our ARR numbers approaching $12,000 per account. Now, this is going to be subscription customers, right? To be fair, there are thousands of customers that come in through the channel, through PR agencies or IR firms that have strategic relationships to buy a product. That is the nature of this business, right? And if any of you have experience in this industry and the trade, that is typically what organizations like us get, and we benefit from. It's a great relationship. There's good margin to be had there, but it is more difficult to sell those customers a full suite unless the trade or relationship of that VAR, value-added reseller, has that option in it. We are going to continue to see this $12,000 number. This is heavily weighted. 92% of these contracts are all public companies, these subscriptions, right? So I've not really talked about private company subscriptions ever. Our PR Optimizer product has turned to a full subscription in the last 6 months, as well as now the media suite. You're going to see these numbers start to jump, and that ARR number is going to move as a result of those two products being added. The average price of a PR Optimizer product is about $20,000 to $22,000 a year. So it gives you kind of a context of what that is. And for folks that don't know what PR Optimizer is that we all in the public company arena try to want to believe that we can write our own content and strategy, or you hire a PR firm, right? And they work with your IR, internal or external IR, to produce content to the market, press releases and everything else, and media strategy. But the smallest companies in the world don't really understand and can't afford a PR firm. So they hire folks like us to write PR strategy, to build PR calendaring and pitching for them. So we maintain a team of folks doing that, managing about 100 customers today and growing at the highest level today that it ever has, actually, to be able to build their PR strategy out at that rate and higher than $20,000. as well. I'm going to add another slide to this that I've never done before, and I think it's important to do given the current market situation. I talked to probably hundreds of microcap CEOs and CFOs and board members, asking them how they're handling the communication of their business to a market that doesn't really care anymore about microcap companies. You look at the news and the market is as good as ever, right? Indexes are as good as ever, but it's a very narrow pointed view to what's going on in our world. And so what I said to a couple of folks the other day is exactly this, right? What is your investment thesis? What are you looking for in a microcap company? And there are risk profiles here. I've listened to about a bunch of presentations, and there's a bunch of companies that are kind of almost pre-revenue, just starting, that are fantastic, and I would actually consider invest. But when I think about us, fundamentally, over 18 years, a business that's generated gross margins above 70%, right, has positive cash flows, which will be about 35 consecutive quarters, customer growth consistent for 15 years, as a strong management team, has year-over-year growth, and has less than 3 million shares issued and outstanding with heavy insider ownership. I'm looking at these 6 things and I'm saying to myself, does that check the box, right? If I'm an investor, that checks the box for me. I need to dig in more and really talk to these guys and gals and figure out what's really going on in the business and where the opportunities lie. So I thought it was important to talk about this, because I really do believe that folks may be thinking about the business a different way and not fully understand it. So our objective here today and tomorrow is to really dig into some of these nuggets and beyond, to talk more about where the opportunity lies for us. And I'll leave you this one last thought, and we'll get to some Q&A for the last 5 minutes. When you think about opportunities, in my view, because I want to sit on your side of the table as well as mine, it's, if I invest today, what's the upside for me? What am I getting, right? What is this business capable of? This is a strong team. Does it have the right product? Is it the right market? Is it the right time? And for us, it's, we spent 18 years focused on a TAM that's a very small subset TAM to where we could go. And so I'm going to give you a bunch of examples here. For the first kind of 10 years, it was public companies, small microcap. If we had a couple dozen mid-cap, large-cap customers, we were lucky. And as time has gone on, until today, you think of like Kimberly-Clark and Delta and Columbia Sportswear and Sherwin-Williams and Gannett, and soon to be Front Door signed this week. We've got hundreds and hundreds of multi-billion-dollar customers now that are customers of ours. It's a significant improvement. And the point being is that the amount of money spent on compliance, IR, communication solutions in the microcap space is small. And if I said to you earlier that 50 companies here that are presenting are already customers of ours, then from an investment thesis, you're like, well, this company may be at its top. There's nothing left here, right? Where else are they going to go? And so the point in the acquisition we did in end of 2022 was to acquire assets that were really down the hall. When I say down the hall is to the private company space, where I could see scale. So the news TAM, right? The total addressable market and news distribution is about $800 million and fairly maybe shrinking, call it 750 this year. If I think about media database, media monitoring, analytics, and pitching, that media suite solution that we talk about, that aggregate global is about $4 billion in TAM. Never had that opportunity before, right? So again, to answer the question of I want to sit on your side of the table is where's the upside here? If I invest today and what the price is in the market, it's undervalued. What am I getting? What is the business capable of? So that gives you some kind of inside thinking into what our minds are and why we've done what we've done, both from an investment of people, investment of tech, and from an M&A capital allocation standpoint. Maybe I'll leave it there. We've got 5 minutes. So I know we're going to have a bunch of questions, but I think that's a good introduction. I know I'm going to have a bunch of one-on-ones, and I'm free the rest of the afternoon if folks want to talk, but I'm happy to take some questions. Yes, sir.
Question on the compliance, you said that maybe 5 years down the road, you could decide that whether it would have a grow 10% of your business versus 28% today. Why wouldn't you consider?
The question is about the compliance business and whether or not we would think about selling in the future or maybe more immediate today. It is a good thought, and I would tell you we've had a lot of conversations about it. Relative to its size, it generates a good amount of cash, to be fair, right? That's the one fiscal responsible side to us. 2, there is a lot of crossover customers that do both services and have binded contracts. So we have to be thoughtful about that, right? To be fair, the revenue is important, the cash flow is important, but I'm going to tell you more over than not, our brand reputation is more important, right? I want to put ourselves in a position to either separate contracts, one, long-term, and or two, find a partner that's complementary to us. That if we do decide to consider divesting that asset, it goes to a partner that's never going to compete and then has the ability to drag our communication products into with their current customers. So I don't think that's a short-term answer. I think that's a longer-term answer. Thank you. Yes, sir. Okay. Yeah, the question really again is about compliance and the complexities of it and what we're thinking. I'll try to answer everything. If I miss it, just tell me what I missed. First and foremost, I would tell you if I went back in the days prior to me starting this business, not that you want to know the details, but I want to give you the context. The Edgar business was done on a per page basis, believe it or not. And companies hired R.R. Donnelley and others and were charged $25 to $50 a page to convert a filing. Take a Word doc and make it SEC compatible, and they pay tens of thousands of dollars. Most mid-cap companies probably spend $200,000 a year doing that. So stands to reason, back in the day, there's a lot of public companies, it's a high profit business, get into the business. By the time we entered the business and built the tech, prices were down to $10 to $15 a page. Today, it's not down to a per page fee, it's down to a flat rate. It's $5,000 a year. And you give them unlimited, so your margins are compressed significantly. So that's a scalability problem, right? So companies are forced to outsource to make money, right? We still insource the majority of that work, which even makes it more difficult for us to handle. So it is a business that just does not have the scale. Now, conversely, kind of combined to both of your questions, if the public company markets turn around and there's growth and we see IPOs coming at a higher rate than we have in the past, we're investing there because we have a good, strong track record of gaining customers there when markets are good. But to be fair, when markets aren't good in this space, the majority of those customers don't have the balance sheet to be able to handle paying you for those services. And they're the last people that they want to pay, to be fair. Yes, sir. So that's a great question, right? Moderna, for example, news distribution, right? Kimberly-Clark, Delta, and the rest of some of the other brands, earnings calls, IR websites, right? So our core IR product set business and communication side is into that install base. The new customers that we're getting by inbound referral coming to us now, on average, about 25% of them are greater than 500 million market cap and growing. That's a good indicator for us. It's brand building, right? It really is. It's about now our brand is being recognized in the market as a viable competitor to what they were currently used to using. And we're winning a good percentage of those. We've got both InfoSec and security teams on staff now to be able to handle, bless you, to be able to handle those things because those customers don't come with a quote and a signature. It comes with a lot of other back office things. And so we've been able to perfect that, and we really do well at that now. And so I think we're winning more and more of those, which is good. Come on, we got like 35 seconds. Yes, sir. We do. Yes, sir. Yeah, if you look at it on a per customer basis, non-subscription, just customer for revenue, yes, that's correct. It is, yeah, there's a huge opportunity for us. Our main focus now is subscription first, right? So we're moving our subscription products into our current customers to get from our 8,000-9,000 ARPU to the 12,000 number that we talked about. But those current customers today that are kind of buying the handful of releases that account for the $2,500, those are also being focused on adding additional products to those as well. Yes. Yep. Ladies and gentlemen, thank you. I appreciate it very much.